Space stocks spent the last 12 months making investors very rich. Rocket Lab went from $20 to $150. But that run was not about Rocket Lab's business. It was about a company you could not buy. SpaceX lists on Nasdaq on June 12, 2026. Watch what happens to everything else in your portfolio. SpaceX is private. You cannot buy it. The one fact is what started all of this. So think about what that means for every investor who wanted a piece of the space economy. SpaceX was off the table. The only option was to buy the companies around it. Rocket Lab, ST Space Mobile, Virgin Galactic, companies in the same sector. Think of it like a painting locked in a vault. You want it, but you cannot get it, so you buy prints of it instead. Every time the original gets more famous, the prints gets more expensive. That is what happened to space stocks for the last 12 months. I bought Rocket Lab years ago when it was under $10. I watched it climb through $20, $50, $100. On May 27, 2026, it hit $150. Rocket Lab's revenue in 2025 was $602 million, real money, up 38% from the year before, the best year the company ever had. 12 months ago at $20 a share, the market valued Rocket Lab at about $11 billion. That is roughly 25 times what the company earns in a year. At $150 a share, the market valued it at over $85 billion. That is 140 times the same revenue. The same business, 5 times more expensive in 12 months. The business did not change that much. Something else did. Now here is what I kept coming back to when I started looking at this. SpaceX filed its paperwork to go public on May 20th, 2026. Rocket Lab hits its all-time high of $150 exactly 7 days later. The same news that started the end of the halo also caused the final price surge. Because once traders knew SpaceX was going public, there was one last rush to buy the print before the original went on sale. That is not a coincidence. That is the halo on its way out. Every step SpaceX got closer to listing, the more expensive Rocket Lab became. And the moment that changed was not May 28 when a rocket exploded. The moment that changed was May 20th when the paperwork was filed. Let me take you through 3 days in order, because the sequence changes everything. May 20th, 2026. SpaceX files its official IPO documents with the US government. Inside those documents is a contract. Anthropic, an AI company, agreed to pay SpaceX $1.25 billion every single month to use a massive computer facility called Colossus through May 2029. Total value in the filing, about $45 billion. $1.25 billion every month. That is more than most countries spend on their entire highway system in a year. 1 week later, Elon posted on X. He said the contract was actually a 180-day short-term rental, with a 90-day notice to cancel on either side. His number for the whole deal, maximum $7.5 billion. Same contract, 2 public statements, $40 billion apart. That post came during the quiet period before the IPO. That is when executives are not allowed to say things outside the official documents that could change how investors read the deal. The filing itself does not mention the 180-day limit anyway. I am not telling you what to think about that. Both statements are on the public record. Read them yourself. One filing, one post on X, $40 billion between them. May 27, 2026. Rocket Lab hits $150, all-time high, 7 days after the filing. One last rush into the print before the original goes on sale. May 28, 2026. At around 9 p.m. Eastern Time, Blue Origin's rocket explodes during a ground test at Cape Canaveral. Not a launch test, a ground test. The rocket blows up before it leaves the pad, on camera. The next morning, May 29, every space stock falls. Rocket Lab, ASTS, SPCE, and the story going around, Blue Origin's explosion caused the sell-off. I understand why people landed there. It is the obvious explanation. A rocket blows up, the sector falls. But look at what else happened that same morning. Bloomberg reported that SpaceX had lowered its target valuation. The number that had been floating around was above $2 trillion. The new number coming out of the negotiations, at least $1.8 trillion, a step down on the biggest IPO in history, on the same day. Two bad news stories hitting the same sector within 24 hours, and Rocket Lab had already hit its highest price before either of them. The explosion did not cause the sell-off. It lit the fuse on something that was already loaded. Most people look at June 12 and think, the price that there is what the market thinks SpaceX is worth. It is not. The opening price on June 12 is built by a set of rules, and those rules were written before you knew this story existed. Here's how it works. When a company gets big enough, it gets added to the major stock market lists. The Nasdaq 100, the S&P 500. There are funds in the world that automatically copy those lists. Your retirement account probably holds one of them. When SpaceX gets added, every one of those funds is forced by its own rules to buy SpaceX. No judgment, no check on the price. The rule says buy, they buy. How much buying? Between $10 billion and $30 billion of forced purchases, going into a stock where only about 5% of the company is actually available to trade on day one. There is under $90 billion of SpaceX shares you can actually buy, inside a company that the market is pricing at $1.75 trillion. A lot of money forced to chase a very small supply. That is what pushes the price up on June 12th, not a decision about value. Are you following this? Because it matters to what you are looking at when you open your brokerage that morning. Now the retail piece. You have probably seen the headlines. SpaceX set aside 30% of offered shares for regular investors, up from the usual 5%. Sounds like excess. Here's what it actually is. 30% of the shares being sold in this specific IPO, not 30% of the company. Of that 30%, the high net worth clients of the banks running the deal are the front of the line. Regular investors with a normal brokerage account are at the back. The demand for this IPO is likely 15 to 100 times what is available for small buyers. Someone applying for $100,000 worth may receive $5,000 to $7,000 worth. The retail slice went from 20% to 30% because the fundraising target went from $50 billion to $75 billion. More buyers were needed. That is why the slice grew, not because anyone decided to be generous. If it is helping you see what June 12 actually is, subscribe and save this video. I have covered SpaceX across dozens of videos on this channel, from the surface level all the way into the S1 details. Those are in the back catalog right now. Come back to this video before June 12. The opening price is not a discovery. It is the output of rules that were running before you clicked. You have probably seen the panic. SpaceX is going to drain the whole market. Sell everything before June 12. The biggest IPO in history is going to suck the money out. Bank of America's chief investment strategist went and looked at whether that has ever actually happened. He took the 10 biggest IPOs in recorded history and checked what the national stock market did in the 3, 6, 9, and 12 months after each one. He found 4 patterns. Pattern 1. The market took off. Alibaba went public in September 2014. It was the biggest US IPO ever at that time. In the months after, the connected market went up 119%. ICBC went public in 2006. The market went up 237% in the year after. But he made something very clear about those 2 cases. The IPO did not cause the rally. Both listings happened at the start of a period when the market was actually heading up. The big IPO was a sign of a hot market, not the reason for it. Pattern 2. One last party before things broke. Japan's NTT and an Italian energy company both went public in the late 1990s. After each one, the market kept going up for another full year. Then the dot-com crash hit in 2000. The IPOs did not cause the crash. They just happened to list near the end. Pattern 3. Terrible timing. Visa went public in March 2008. The S&P 500 fell 34% in the next 9 months and 43% in the next year. But 2008 was the global financial crisis. Lehman Brothers collapsed in September of that year. Visa did not do that. It just listed right before everything broke. Pattern 4. Nothing happened. Saudi Aramco 2019, Facebook 2012, General Motors 2010. The market just kept doing what it was already doing. No crash, no rally, nothing. His conclusion: a landmark IPO is a symptom of where the market already is, not a cause of where it goes next. That is the market-wide answer. For space stocks, the question is different. The question is not what happens to the Nasdaq after June 12. It is what happens to the print when the original painting finally goes on sale. Rocket Lab's real business, separated from the halo. Electron is a small launch rocket. In 2025, Rocket Lab flew 21 missions. Every single one worked. That is a success rate almost no other private launch company in the world can match. Space Systems builds satellites and spacecraft for customers. In 2025, Rocket Lab won a contract worth $860 million from the US government to build 18 missile warning satellites. Total orders on the books at the end of 2025, $1.85 billion, up 73% from the year before. Neutron is a bigger rocket still in development. It has not flown yet. The market is pricing it in regardless. Annual revenue, $602 million, up 38%. The business is genuinely growing. Market value today at around $123 a share, about $70 billion. That is 117 times what the company collects in revenue every year. Now watch June 3, 2026, 7 days after the all-time high. The halo starting to separate from the businesses underneath it. ASTS fell 9%, a Q1 earnings miss. The business disappointed and the halo could not cover it. SPCE rose 18%. A short squeeze plus its own good news. Progress on its new vehicle. The CEO confirmed a timeline. An analyst at Jefferies reissued a buy rating. Nothing to do with the sector overall. RKLB fell 13% on an earnings beat. 3 stocks, same sector, same morning. 3 completely different directions. When the halo is the trade, everything moves together. June 1st was the morning the halo stopped being the trade. Here's what I'm personally watching over the next few weeks. Whether Rocket Lab announces a confirmed commercial launch date for Neutron before or after the SpaceX passive fund buying is done. Right now, the Neutron potential and the SpaceX halo are sitting inside the same $70 billion number. Once the halo leaves, what is left in that price is the market's bet on Neutron alone. Those are 2 very different sizes. When I put all of this together, I went back and looked at what I hold, not to make a decision, to ask one honest question. The $602 million in revenue is real. The $1.85 billion backlog is real. But at $150, I was also holding something that did not belong to Rocket Lab. The price that day was not telling me what Rocket Lab was worth. It was telling me how many days were left before SpaceX listed. 3 things I'm watching. 1. June 12, 2026, SpaceX's first day of trading. The opening price is not a signal about what SpaceX is worth. It is a signal about how much forced buying is in the system. Watch the gap between the IPO allocation price and what it opens at on the open market. 2. Index inclusion date. When the Nasdaq 100 and S&P 500 officially added SpaceX, passive funds execute their purchases by group. That is the mechanical price event. Watch for the inclusion announcement, not just the listing date. 3. Rocket Lab's Neutron launch date. The first confirmed commercial launch date for Neutron is the moment the market starts pricing the business instead of the potential. That date has not been set. I bought this stock years ago when it was under $10. I watched it to go from $20 to $150 in 12 months. Then I went looking for what I had actually been holding during that run. The stock and the business traveled together for part of that journey. At some point, they were traveling separately. You bought the business. Did you also buy the halo? And when those two things separate, do you know which one are you holding? If this breakdown was useful, hit like and subscribe. I go 3 layers deep on the stories that matter for your portfolio every week.